Joining us now is VanEck CEO Jan VanEck. It's great to have you back on the show, and I'm going to start it right there. Why slash to zero? And is it really sustainable to be able to do this for the next year? How do you make money if that is the case?
Well, we've always thought that our fee had to be competitive, Morgan, and we came out with one of the lowest fees initially at 25 basis points, which we've lowered to 20. But to be honest, I thought waiving fees was kind of a gimmick, but then I saw when all these ETFs launch at the same time, it really matters in the minds of investors. And so we've always wanted to be price competitive. So we joined the party this week.
So how sticky do you expect those inflows to be? Because at some point, whether it's a year from now or whether it's when you reach that $1.5 billion mark, you're going to reinstate fees. Given the fact that it is a competitive landscape, do you expect those investors to stay put?
Yeah, I mean, first of all, we've been talking to our clients about crypto since 2017. So we have long-term relationships with a lot of people that are allocating. And second of all, as we've seen over the last couple of weeks, tax considerations are really a big deal. So the reason probably that Grayscale hasn't gotten more redemptions is that people have gains and they don't want to realize those gains for tax reasons, especially if, like we think, we're just in the middle innings of a bull market for Bitcoin.
Jan, what's the long-term value of a crypto ETF investor? What else do you think they're going to want to buy from you? What other kind of business are they going to do?
Well, our average client has 3 or 4 of our ETFs. They usually start with one, so it could be GDX, it could be Moat, or it could be HODL. But it's a relationship that we develop over time, and usually they look at other ETFs. We also have a family of crypto funds. We have 2 private funds that perform really well that are not available retail in the United States for regulatory reasons. But so we have typically a broad relationship with our clients, and we want to stay in the conversations, and that's why we did the fee cut.
And so is that the playbook then over the next however long, as you're gathering those funds that you're getting flowing in from cutting the fees, to then get your sales folks saying, okay, look at all of the value that VanEck can supply to you?
Again, a lot of the value, John, is just the conversations with clients and an honest discussion about where we are in the cycle and where Bitcoin fits in your portfolio. So, that's really what we're targeting, is to stay involved in those conversations. I came on your show a year ago, was very bullish. Bitcoin at that point, still bullish now, happy to discuss that. But at some point, it's going to be a time to take profits. And hopefully we'll be an honest voice about that with our clients.
Yeah, it's like you took the question right out of my mouth. And the fact that you were bullish early. We are trading at a record here. We know more investors, the base of investors has expanded with the advent of these ETFs like yours. Just how much further do you think this has to go, and what do you think is propelling Bitcoin right now?
Well, there was 2 dynamics that we talked about a year ago. One was the macro cycle of the Fed and interest rates, which a lot of people talk about. I guess I would put more weight on the Bitcoin cycle, which is the halvening that's happening next month. But then around the halvening, where the amount of Bitcoin coming to market is cut in half, effectively. And so after that time period, you see another year of a bull market with typically 20% drawdown. So you want to buy the dip. So this is still, I guess, we're in the Bitcoin cycle. We're still, right in the middle of it.